Hey guys, welcome back. In today's video, we are talking about the huge AMC run, the record dark pool, potential mergers, and many more in this video. First, we're looking at this. The current market cap of AMC, the world's largest movie theater company, is 0.69 billion, slightly above 0.64 billion of August 31st, 2020, when movie theaters were considered destined for bankruptcy due to a worldwide pandemic. Does that seem reasonable? So we are looking at AMC right now, and of course there are all these people who are constantly making out different points, talking about debt, talking about other factors, but can you really say that AMC should be the same or if not similar to the value of when it had its movie theaters shut down, when its whole business wasn't operating? The answer to that is obviously no. You can use the debt, you can use whatever, but there is no way that that should allow AMC to be at an equal value than when it was not actually operating its business. And so we've always known that the real value is nowhere near what we're looking at. We're of course looking at a 10x and even higher. What we also have to realize is that currently we're looking at record dark pool that I'll talk about later on. But it's also you have to understand these facts and repeat them to yourselves. AMC has plenty of cash and access to credit. Q1 is a non-issue. The box office and AMC is going to have a March to January run not seen in 7 years. AMC will deliver significant cash and profits in that time period. Now, from the latter half of 2025, we should already see how well the box office has recovered, how well the box office has improved. And that momentum is only going to carry over into this year. Q1 will of course always be the slowest year, but so far Q1 has already been exceptionally well. So you can only imagine Q2, Q3, and ultimately Q4 to get even bigger. We've already seen how AMC is improving. We've already seen how AMC is becoming more efficient. So when we get a record box office this year, whether it's a record Q2, Q3, or Q4, AMC is going to thrive along with that. So we're definitely going to be looking at AMC delivering very, very good financial results. And once again, showcasing why it's undervalued, why it should not be anywhere near 0.64 billion, and why it should be higher by 5x, 10x, or 100x of what we are looking at right now because of the value. And so this is something that you obviously have to realize. Now, another big reason, and it's ultimately why we're seeing AMC as the same price as when it wasn't operating its business, is because of things like this. 0 shares of AMC available to borrow. Self-reported short interest is up to 26.11%. Explains why the price has dropped. Do you smell what the naked shorts are cooking? So yesterday we talked about this, where we're looking at short interest shares to be at 120 million, shares on loan at 197 million. We're looking at utilization rate at 100%, with the cost to borrow gradually increasing. All of these are all indications of how shorts are continuously grabbing shares with as much as they can get their hands on, and now of course using that to suppress against AMC. And we've also have to realize is that at the end of the day, this is self-reported data. The real number could be way higher than what we're looking at. It could be 10 times, 100 times, 1,000 times higher than what we're looking at. And so we never use it to look at it as face value. What we use to gauge as is the very fact we're seeing how was increase in 157% of short shares, an increase of 398% on shares on loan. So I personally like to use it for just that percentage, because what we could be looking at is that instead of 46 million shares, it could be 460 million, it could be 4.6 billion shares, because we know that there are just that much shares that exist out there. And so this is the first reason for why we're seeing the price comparable to when AMC wasn't operating. Another big thing is that it's crazy that 94.7 or 18.1 million out of today's volume of 28 million AMC entertainment shares traded by retail are being pushed off exchange. So this is also another big reason. Now, we've already talked about all of these reasons. We already know these reasons. But to really put it to context and to really look at how right now especially with everything that's going on in the market. We're seeing the 94.7% dark pool usage on AMC. We're seeing the complete opposite of what real price discovery should be. And there's this always constant talks and all of these haters trying to say that everyone's selling AMC, no one's buying AMC, that's why AMC is falling in price, whilst completely ignoring the fact that the majority of these 94.7%, the 18.1 million volume, these are majority buy orders, but because it's in the dark pool, is not having an effect. And that's the real reason. If you also take a look at this, second half of January's AMC off-exchange volume has stayed 70% plus consistently, with a few days over 80% plus, including today. Now, this should already be a crazy statistics for everyone to see. This is what we've looked at. Now, it's no surprise that we've saw this because we've already talked about this. Because what happened during the middle of the month, when we saw AMC having a day when it went up 13% and another day when it went up 5%, and bear in mind is that actually for these days, AMC went up even higher. It was just at its close. These are 13% and 5% respectively. But during those 2 days, it already dealt damages to the shorts. We talked about how there are short positions open at these positions. We talked about the new flow of AMC that are being shorted at these positions. Remember, that's how much money they're losing. And so the very fact that they saw AMC started going up when they started relaxing on the dark pool, then this whole section is what we've just talked about here, with how the dark pool is constantly over 70%. You can even see here when the 70% started. So look at the 12th, we're looking at 67.97, and then straight away on the 13th, we started looking at 71%. And then not a single day after that did we drop below 70. Going back to the chart, when we saw this, we saw the 12th. This is when, right after the momentum of the Friday of 9th, we saw the momentum of AMC going up, 5.49. Again, a green day for AMC, going off of the back of the 13%. And then the 13th, we then saw a red day of negative 6.94. And that's when the start of the decline started happening. When you look at it and compare it with the off-exchange data, you start to see exactly what is going on. And this is what we've said. This is not done because these people are trying to say that investors are selling. No, this is done because of what's happening on the charts that we are looking at. And so if you even see here, never before has there been this large of a gap in a dark pool trade versus lit trade. And it's the retail trades predominantly being sent to dark pools. This is only occurring with AMC. I checked other retail favorites. Why? So this is already another pair of data that you need to look at. And the fact that it's retail trade. So the very people who are trying to say retail are the ones selling, they are then ignoring the fact that retail trades are also being sent to the dark pools. So if retail are in fact selling and is being sent to the dark pools, then that would have no effect on the price. Then therefore we shouldn't be seeing the price dropping. If you're trying to say that the reason for the price dropping is because retail are selling, then that is not the case, because retail trades are going into the dark pools. And so if we're seeing that and we're seeing the price go down and the retail trades are going to the dark pool where it doesn't have any impact on the price, we know what's going on. Now, just going even back to what we talked about here with the correlation between the dark pool and then the price start dropping, you already see what's going on. Now, that isn't going to stop us at the end of the day. Yes, this is the manipulation that we are seeing. Yes, it's the suppression that we're seeing. But ultimately, apes have continuously strengthened themselves. You can see from another user, mark me down for another 5,000 synthetic AMC shares, where we see this order go through. Now, ultimately, this is what makes the community powerful. Like we've said, it's not the constant buying. Whilst the buying is something that's been huge and is what's forced these short sellers to create more synthetics, this is what is increasing the floor price. Another important factor is the ones who have never sold. Now, as always, none of this is financial advice, so do take a grain of salt. Make sure to do your own due diligence and research. But the power that we are having by not selling and forcing these short sellers to not be able to cover, that's ultimately what has kept this going on. Now, you can see examples of short sellers, Virtue, one of the AMC short sellers, to be abusing, these things that also we've seen on AMC. years of spoofing, wash trading, naked short selling, and other deceptive order book tactics. Now, do I think that this is true? Of course, because we see this on AMC, we see this on countless other stocks. It's no surprise that they're facing this market manipulation lawsuit. And this is something that we've seen on AMC and GME and countless others as well. But another thing is AMC is allowed to sell 150 million worth of shares starting Feb 2nd of 2026. Now, we've already talked about this yesterday, and you can see in terms of how they've been attacking AMC to suppress the AMC near VWAP, and then to obviously make sure that AMC can't raise as much money. Now, AMC is allowed to sell 150 million, so then they're capped on how much they can raise, but what they are suppressing is the ability for AMC to sell as little shares as possible whilst raising as much money as possible. Because at the current price, AMC will have to sell, if they wanted to sell 150 million worth, they will have to sell 100 million shares at $1.50 if that is the price. And even more, at $1.35 per share, they will have to sell 111 million shares. But of course, if AMC was $15, then AMC only have to sell 10 million shares to get 150 million. And so you can see the discrepancy in that, and that's why they're suppressing AMC. But another big thing that's in the market today that I want to talk about is this. So Ryan Cohen, the billionaire CEO of GameStop, said he's eyeing a major acquisition. And famed big short investor Michael Burry is cheering him on. And you can even see Michael Burry reply to this. Ryan talked with the WSJ. Now, there's been many speculations. You can see here, Ryan Cohen could do something really funny. AMC only has a 703 million market cap, which has gone even lower. This will barely put a dent in GameStop's cash tag, and Michael Burry does have AMC in his banner. Now, Michael Burry has been involved with the whole scene of naked short selling and synthetics. One of the examples he gave was GME, but he has mentioned AMC before. And now in this case, it could be a big thing that he's betting on the short squeeze. And in this case, GME and AMC would of course be the powerhouse. You can also read that and tell me why it couldn't be AMC. Because what Ryan Cohen has told CNBC in the interview is that it's going to be really big, said of the size of the acquisition is transformational, not just for GameStop, but ultimately within the capital market. So could he be talking about two highly synthetically rehypothecated companies, that has faced naked shorts, synthetics, to come together to combat this? This could be something that is major. And another big thing is, ultimately, we have talked about this. AMC is in a position where they have an extremely well thought out operational structure, but what they're lacking is cash. GME, on the other hand, has an extremely healthy cash pile, but doesn't have a good operational business structure. And so the ultimate thing would be combining the two together, because then you will have a company that has great and healthy cash, but also operational business structure. And so this could be something that could be major. Now, today, what also happened, we saw the massive sell-off, and it wasn't just in stocks, crypto, but commodities as well, the metal markets as well. Now, firstly, some people may be worried about the HYMC investment, and I completely understand why you would. We saw it drop over 15-18% today. But a big thing is that Diane, the CEO, has mentioned that when institutions want to take profit on HYMC, she advises other institutions on the waitlist, and they jump in immediately, minimizing any short-term negative impact on the stock. Now, on a day like today, where we've seen this massive drop that has put HYMC at an extremely good discount, it's very likely starting Monday, we're going to be looking at these waitlist institutions to really jump back in onto HYMC. And so for me, I am not worried about that, because some other things you want to talk about is the rates to borrow SLV shares for short selling. Another striking piece of evidence that all that's happening today in silver and metal has nothing to do with the physical market, but it's all purely derivatives driven. Because at the end of the day, we talked about this, there have been banks who have been suffering because of the silver price going up. The only thing they can get out is, of course, by suppressing the paper price. But if we take a look and that the physical world is still selling at the physical price, then ultimately this is going to kind of catch back up. You can see Shanghai Premium hits mind-numbing 44.17 per ounce, up nearly 100% in the day. So am I worried about silver price continuously falling? No, because I know the fact with the premium still there, it still shows that there's a demand. And ultimately, demand being there will allow us to know what is going to happen. You can also see, whilst the price is going down, we're still seeing the delivery notice of gold. And now this should already be the indication that people are still in need of this. The demand is still there. So the price going down isn't affecting the demand. And so if the demand is still there and the supply isn't, then ultimately the price is going to go back up. And another thing about HYMC is that the top 20 gold and silver relative strength snapshot, we have HYMC at number 1. Now, this is what we're looking at, but you know, this is something that we have to realize about why I'm not worried about HYMC. As always, none of this is financial advice, so do take our Instagram, so make sure to do your own due diligence and research, and I'll catch you guys next time.